Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today is the 6th of August 2019, so welcome everyone. Welcome to this Tuesday's afternoon session where we're going to have a quick look at the markets, a few of the charts, some of the charts that we looked at this morning as well. So, yep, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Now then, quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and also our JFD research page, which I believe you can find quite useful as we throw out different analysis here on a daily basis. So feel free to check us out here, and I believe, like I said, you can find some useful stuff. But for now, let's jump into the charts. Now, the first one I want to touch on here is the Dow Jones. Now, of course, as you are aware, the U.S. equity market has dropped severely yesterday, pulling the cash indices of European indices, pulling after themselves. So basically, long story short, Dow Jones fell about almost 3% to the downside here, of course, and managed to reach a few of our key support levels. Now, one of them was the 25,717 zone. I talked about this one previously, and this was the high of the 28th of May 2019. But of course, the index didn't stop there. It continued to drift lower and managed to reach the area near the 25,523, which, as you can see, held the index and pushed. And this is where the buyers managed to push the index a little bit higher here. Now, it traveled back above this 25,717 zone and closed above it. So also looking at the cash index right now of Dow Jones, we can see that it is trying to make its way back up here. It's currently trading at around 25,850. So of course we'll have a nice opening gap here to the upside here today on this one. So in a way, of course, we could see a bit more correction here to the upside, maybe going all the way towards the 25,960, or even towards the 26,250 zone, approximately around there. This is where the index could also meet its 200 EMA here on the 4-hour chart, and of course we'll take it from there, see what it wants to do, because if it holds, then we could see another leg of selling here. So in a way, if I quickly draw an arrow here for our future reference, so basically something like this could be possible here. So as I said, we could see this one correcting a little bit higher, maybe going all the way towards the 200 EMA, and if it holds, then we could see another leg of selling. So that's why, guys, for now, be very careful, because it's a tricky one. It's probably, like I said, the bears do want to go in already right now, but again, given that it has sold off quite severely, there could be some more upside for a correction before, kind of, like I said, aiming before selling off again potentially, of course. So this is, for now, this is the idea that we're keeping in mind. If, of course, the index travels above the 200 EMA and climbs above the 26,465, in a way, I'm not saying that this is where we will start pushing to the upside, but a bit more upside could be possible, a bit more correction to the upside could be possible. So in a way, we could eventually even aim for the 27,000 level again. So that's why, for now, keep your eyes on some of these key potential breakout points. So on the upside, we'll keep an eye on the 26,000 465 area, approximately around there. And if we see a push above this, then we will aim for the 27,000 level again. But if it struggles to push above the 200 EMA here, or even let's say if it eventually doesn't reach the 200 EMA, then we could see this one reversing back to the downside, because as I said, right now the cash indices are all correcting to the upside. So that's what I'm saying. So if it doesn't reach the 200 EMA, then well, brace yourselves, we could see maybe another slide. And to be honest, we do have some good potential targets here underneath. Of course, initially we will aim for this 25,523 zone, which was reached yesterday. But again, it may, if this gets a break, then we may even actually target the 24,680, which is the lowest point of June. So keep your eyes on this one, guys. S&P 500, somewhat a similar story here. So we are seeing the cash index retracing a little bit to the upside here, and is currently sitting near the 2860 zone. So it's somewhere around here basically. So for now, again, all eyes are on the 200 EMA here on the 4-hour chart. If it continues to hold the price down, then well, we could see another leg of selling. And but if it gets a nice good break above it, well, keep your eyes on the 2913 level here, 2913 level, which previously, as you can see, acted as a fantastic area of support. This time it could take the role of resistance, but if it gets a nice break, then well, I mean, we will aim for maybe a bit of a larger or I wouldn't say even actually correction, but just a move, a small move higher initially, because it will be very interesting to see if the index could actually travel back up towards these all-time highs again, or even towards, at least towards the 3,000 level. So that's why if we see a push above the 2,913, we will initially aim for the 2,958, which marks the low here of the 31st of July, or even slightly above that. We do have the 2,976 zone, which acted as a good support on the 22nd of July. So for now, keep your eyes on this. Like I said, we are expecting a bit more correction here to the upside, maybe up until this 200 EMA. But after that, we'll take a closer look, because if it holds, then yep, we could see another leg of selling. But if it fails, a push above the 2,913 could in a way lead towards some slightly higher levels. Jumping into a few pairs now very quickly, and one pair probably you don't look at very often, but it's quite interesting, and that's the US dollar against the Norwegian Krone. So this picture here, you can see, and probably don't need to explain here too much, you can see that the pair is quite overstretched here to the upside. So it managed to travel all the way higher here, managed to test the area. Let me just quickly mark this one here, near the 8.9565 zone. So it managed to reach that level here. And just to show you where what are those levels, and what are those levels in the past, what were those levels in the past, basically the pair traveled all the way towards the highs of January 2016. So this is where the pair kind of met its resistance near those highs. Don't get me wrong, we're still you can see that it didn't quite reach the highest point of January 2016. So let me just quickly put this one on the chart and just quickly mark that, and that was near the 8.9930 zone. So as you can see, the pair just fell shy of a few pips kind of from reaching that level, and now it started retracing back down. So you can see by the daily chart here today, you can see that it's now declining. In a way, there is a possibility for this one to drift a little bit lower here, maybe go for a little bit more correction. And if, for example, we try to draw a Fibonacci here, a Fibonacci retracement, this is where I'm gonna what I'm gonna show you, and this is what we could in a way expect here. So this is what I'm talking about. So for now, we can see that it's sliding to the downside. Our first target is going to be around here near the 8.85 zone, approximately around there. Maybe just a few points higher, but still the 8.85, that's what we're going to be looking at. If this, of course, fails to stop this the fall, then the next potential target could be around the 38.2% retracement here on the Fibonacci, and that's near the 8.79 40 zone, so approximately around there. So keep your eyes on that level. Now if we get rid of this in a way, also what you could keep an eye on is, of course, some of these key areas of, well, previous resistance. Now they could play out as nice area of support. So this 8.82, that's slightly below that 23.6% retracement on the fib, so also could be a good potential target. 8.8245 zone, approximately around there. That marks the high of the December high of 2018. So good potential area, good potential target for support. But if, let's say, this gets overshot, what you could aim here for is this little level right here near the 8.80 zone, approximately around there, guys. So 8.8050, something like that. So if we see a drop below this, then in a way this could lead the pair towards maybe a deeper decline here to the downside. Now don't get me wrong, overall we're still kind of on a positive uptrend here, or positive up, just on an uptrend here, but for now, like I said, for now, given that it is quite overstretched here, even on the daily chart, we could see some more correction to the downside. But if it starts breaking some of these key areas of support, then this is where we will consider a further move lower. So for example, if we see a drop below the 8.8050, then we will consider a possible move back down here towards the 8.6760 or something like that, so near the highs of near the high of the 9th of July. So keep your eyes on this one. But again, for now, this little move lower could be classed as a temporary correction before another leg of buying. So be very careful here and keep your eyes on some of these levels. Jumping into something that is more tradable and more popular, and that's USDCAD. Now looking at this picture here, you can see that the pair is running within this rising channel formation. Now we threw out something here on our account, on our trading view account, so this morning, and basically the pair was still kind of balancing close to the lower side of this rising channel, and this is where we were staying. So if this line, this upside line, continues, let's say, to hold, sorry, this lower side of the rising channel continues to hold, we could see this one pushing back to the upside. And as you can see, now the pair is making its way higher again. So it's current for now, it is working nicely. For those who are more on the cautious side, what you could do here is just wait for a push above the 1.3267 zone before kind of targeting higher levels. And by higher levels, I mean the 1.3330 could be a nice potential target. It's also close to the upper side of the rising channel formation. So for now, guys, again, like I said, all this kind of is still looking quite positive in the short run. For those who are more in the cautious, you could in a way wait for a clear break above the 1.3267. This a break above this would confirm forthcoming higher high here, and we could aim for the upper side of this rising channel. In terms of the downside, still we stick to the same idea. We need to see a drop below the lower side of the rising channel, and ideally, in addition to that, a drop below the 1.3172 could in a way do the trick here for the bears, and we could see this one sliding back down towards the 1.3109 zone, or even further below. So for now, again, like I said, keep your eyes on some of these levels. Again, this is now pushing to the upside. It is looking quite positive. It is already trading above its pivot today. So if it stays here, then yep, we could see this one continuing to the upside, and aiming for the 1.3267. So keep your eyes on that level here. GBPUSD, very quickly on this one. So initially we did have a nice pop here this morning through the 1.2172-75 level. I talked about this one, and but now you can see that the bears are kind of taking control again and pushing the pair back down. And this is what I was also mentioning, and this is what I was talking about. So basically, even if we see a push above the 1.2175 zone, 72-75 zone, yep, it could open the path towards the upside. I mean, it initially did travel, but what I was saying as well was that for that better confirmation of the upside, ideally we would like to see a push above the 1.2250. As you can see, the pair kind of didn't reach that. I mean, don't get me wrong, we still have a good day to go. Well, today, the whole US session to go through this one on this one. So if it stays above the 1.2172-75 zone here today, then yep, it could in a way reverse and push back to the upside again, aim for the 1.2250. But like I said, keep your eyes on this level, because if we get a nice pop above this, then yep, we will aim for a larger correction to the upside, because overall we're still in a downtrend here. So that's why be very careful with that upside. And like I said, any push higher could be met with strong bearish resistance. So that's why, and this is exactly what you're seeing here right now. We did have that nice good break above the 1.2175, but as you can see, the bears kind of are trying to fight it back and trying to push the pair back down. Let's see if they actually manage to do that. If this pair travels back inside this little range, this previous range, then this is going to be our little neutral territory, because to get more excited with the downside, ideally we would like to see a drop below the 1.2080, and only then aim for further declines. And of course the long-awaited 120 zone could be a nice good target. And the last pair for this session is going to be EURGBP. Also, this is what I talked about this morning in my Traders Espresso, and basically we need to see we had to see a good clear break through one of these highlighted areas before kind of aiming for further directional move. So I mean, today you can see that the pair slid lower. It broke this tentative upside line. It also broke this 0.9190 level, and but got held near this 0.9170. So maybe this is something for tomorrow, but again, like I said, this picture currently kind of is making us think that there could be a possibility of seeing further declines, especially especially if it drops below the 0.9170 level here, this key area of support. And if we see a slide below this, then we will aim initially for the 0.9124 or even better, the 0.908788 zone, approximately there. So for now, we're going to keep it short and simple. We're just going to go step by step, but like I said, for now, in terms of the downside, we need to see that nice good drop now below the 0.9170 level, just for that better confirmation, because you can see that the pair is retracing right now. So that's why it's trying to, of course, retrace. We'll see if it's going to be successful. So that's why I'm saying, just for that better confirmation, wait for that 0.9170 level. If we see a drop below this, then yep, we'll aim for lower levels, because we initially today we already got our drop below the 0.9190. Of course, this, like I said, it did lead the pair further down, but as I said, it is finding good support right now here. So we need to wait for that now another good confirmation before kind of aiming for the downside. With the upside, we'll still remain somewhat conservative and let's stick to the same plan. Wait for this break above the 0.9250. This way the pair would confirm a forthcoming higher high, and we could then maybe even aim for that 0.9305 or 6 zone, approximately around there, guys. So keep your eyes on that one. Okay, guys, I hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me tomorrow morning, as always, I'm in my Traders Espresso, and that's 6 o'clock GMT. For now, I hope you have a beautiful evening, and yes, yep, I'll see you tomorrow. Thank you very much, and bye-bye.